All right, guys, investing can be one of the most exciting things that you can participate in your life. This video is going to roll out portfolio review number 2. This is going to be the other self-directed Roth IRA account that I hold for my spouse. So as you can see, please don't forget to catch the other Roth IRA video that I've released already. It's super important to understand how I look to build these two IRA accounts to complement each other. The important takeaways are to understand that the monies that have been contributed to these Roths over time are all tax protected now within the Roth IRA. The important takeaway is that it is a self-directed Roth IRA, which means that those dollars are able to really grow unobstructed going forward. They're liberated dollars. They have the ability to grow without the restriction of fees being imposed within the account, which is really along the niche of the independent investor channel. I talk all the time about the importance of the structure of your investments and not necessarily the nuts and bolts that make up your portfolio. But these are enjoyable. The subscriber base enjoys these videos to understand how it is I seek out my exposure. You'll get the ticker symbols, you'll get the dollar amounts, you'll get the share amounts within these portfolio reviews. So full transparency. I'm going to take you into the portfolio, do a deep dive, and show you exactly what is making up this self-directed Roth IRA account number 2, guys. So we'll drop you in there now. Please enjoy. All right, guys, welcome in to self-directed Roth IRA number 2 portfolio review. This is going to be awesome. This portfolio has really come a long way in a short amount of time. You're going to see still there's a little bit of less than appealing holdings. Certainly started off by the position in Cisco, just took a huge leg down. I talked about this a little bit on the live stream. Actually half tempted to double up on the position, but took such a nice position in it to start. Already got almost a share for free in the stock. But a significant leg down, totally fine with it. Technology is one of those sectors that I pay the most attention to, making sure that I have at least equal weight in. It's my favorite sector to invest in. So I try to put these nice, big, established companies in there to try to buffer some of the more aggressive holdings that I may opt for at certain times in the technology sector. But AbbVie, I shouldn't have sold it. That was a mistake. You know, I may look to add back into it. It's just hard to do so because the stock has just run up after I took a nice trading profit in it. But Corteva was a three-way split with Dow DuPont and Dow, which I'm holding true on. I actually took a little bit more in Dow DuPont here. So increased that position to something a little bit more respectable. But got a small position in Chevron. I'd really like to double up this position here. I may do so in the short future. You can see here the liquidation in General Electric, and the new addition of General Mills hasn't had a chance to pay the dividends in the portfolio yet. So just started out there. We still need to set this for dividend reinvestment, which is fine. And then Honeywell, that's one of the most exciting positions, the new positions that I've taken inside this Roth IRA number 2. And then Intel's been a nice performer this year. It's been really, really good. I have traded Intel a couple times and taken a significant amount of profit out of the name, much more than what's indicative here of what I consider to probably be it. It'll probably be stuck in the portfolio for the long term now, which I'm fine with. JP Morgan Chase has just been a really rewarding stock. I had to be patient on this one, but it's come back, pushed me way up over 5,000 in the holding, over 41 shares and up just over 10%. So satisfied with that. Kraft Heinz added a nice respectable position back into there to give me some of the staples that I was seeking. I was very, very deficient in staples. So you can kind of see where I tried to add some of that in the General Mills, as well as the Kraft Heinz. I'm probably going to be looking to add some Mondelez back in here, and also maybe some Kellogg. So I may add one in here and one in the other portfolio. As we move down the list here, 3M has really come back nicely, slowly but nicely. We really had this one in a downturn all the way down into the 150s, and I made the comment a few live streams ago. I had one of the subscribers ask if they're waiting for it to go down to 140, and I said, well, you might be waiting a long time. I thought 150 was it. It turns out I was right. So company that, I put this in the same class as Boeing. I really do. As far as super quality industrials, being that it's one of my favorite sectors, you get Caterpillar, Cummins, John Deere, and then you've got 3M and Boeing. I just think those are premier players. And then you've got representatives like Honeywell and United Technologies. And then on top of that, you throw the defense subsector on top of that. And you've got some really, really quality companies out there doing some phenomenal work. So exciting to own the name here. You can see it fits right smack in the middle. This will be one that I look to keep for many years going forward. Merck right below that, another example of just a nice high dividend paying healthcare company. Microsoft right below that as well. Microsoft has just been on fire this year. PepsiCo, there's the mirror image of what's in the other portfolio in Coca-Cola. Pepsi has really done well. It's performed nicely this year. I just can't complain. Pfizer, nice big position there, seeking a higher than average dividend in Pfizer and some healthcare representation within this. Raytheon, nice big position in Raytheon. I typically don't do this very often, but I would like to take my Lockheed Martin and Northrop Grumman positions up equal with this at least 10 shares, but it just goes to show how much faith I have in this Raytheon holding. It's one of my favorites in the defense. Very interesting name. And then right below it, a new addition this year. This is Starbucks. Went ahead and purchased this for the discretionary exposure. AT&T, of course, I've owned for a while. Nice to see that back in the black performing for me. Toronto Dominion in the financials has underperformed a little bit, but this was down a lot more than this, so it's starting to climb back. United Health Group really took a huge leg down, and I stuck true to the name and actually doubled the position to something sizable, and now it's helped that accelerate back up over into the positive category. Union Pacific, waiting for that to clear out of the portfolio. Don't really want to own any more industrials than I already have. I like Union Pacific, I really do. This was more of a sector, industrial sector reduction initiative by taking that down a little bit. Visa, what can I say? It's just been a fantastic stock in this portfolio, one of the cornerstones, one of many. As everything that I'm declaring to you guys are long positions. Remember, I've been doing a lot of work in here anticipating that a potential recession, if it does end up coming, I will just have done a lot of preparation up to that, and it won't be a surprise. I don't really care if the stock market goes into recession or not, but I think what I want to get across to the subscriber base is that if you expect that the stock market is going to continue to go up forever, there might be some potential there for disappointment, okay? And the trick is to prepare for a recession, not expecting that it's going to happen or knowing that it's going to happen, but being prepared if in fact it happens. And that's really the key. You don't really want to be caught surprised and off guard by being over allocated to risk, making sure that your positions are within reason. This came up during the live stream, and they were talking about some of their positions, and you guys can see here, relative to the total overall portfolio, very few of these companies get up to the level of being considered a large position representing a large section of the portfolio. I'll show you the largest position I have right now is right here in Vanguard's total stock market, the VTI. That's the largest position right there at $6,400. So as we round out the list here, Vanguard's small cap, I believe this is the value or the growth side, the VBK. I believe this is growth in here. done quite nicely. And if this is any indication of how well these Vanguard products can perform over a short amount of time, this is it. I mean, they are stock holdings, but they are ETF, indexed ETFs that represent the specific market that you're going after. VYM is one of my favorites, really nice. We've already gained a half a share for free, having the dividend reinvestment set up there. So really nice, approaching 7% there, approaching 6% here. We just cannot complain about how well those perform for you. And then Verizon has just been a secret killer this year. It's been really nice, up over 3% and paying a nice dividend there, a half of a share free of charge. And then finally, to round it out with Wells Fargo, that's been my top performer in financials, or one of them, just behind JP Morgan Chase. Wells Fargo's done quite well, continuing to earn that nice dividend in Wells. And then finally, Waste Management. This will probably be the number one position that I look to maybe double up on. I may do that this week. We'll double this up to a respectable 20 shares and get that $1,100 base up off of 1,100 and something a little bit more respectable in there. So guys, I hope you appreciated this review of self-directed Roth IRA number 2. With that, I will kick you back into YouTube. All right, guys, welcome back out of the portfolio review. Remember, this was self-directed Roth IRA account number 2. This is also approaching $100,000. We've got a little work to do, but this is my spouse's account. I build these accounts to be complementary of each other. There is really very little overlap in the two accounts. I try to build those to complement each other. So anybody out there looking to build multiple Roth IRA accounts for either yourself or your spouse, or you're looking to build them together, I do fund both accounts on the same schedule. So something to take note, but I really hope you guys enjoy the transparency and understand the underlying message that exists, why I roll these portfolio reviews out, and understanding that a tax protected and a wealth preserved dollars is really the key and the real takeaway on what I expect the subscriber base to really get out of these portfolio reviews. If it's your first time tuning into the channel, you don't forget to hit the subscribe button for me. Leave your comments at the bottom of the video. Share the message with anybody who you think can benefit from the information we're putting through, introducing people to the many, many benefits of investing in the stock market and seeking out some financial awareness for themselves. Guys, thank you so much for tuning into the video, and good luck in your investment future.